All right, let's dive deep into ETFs. We're talking short-term wins, long-term wealth, and everything in between.
Sounds good to me. It's all about making those ETFs work for you. And that means going beyond the basics.
For sure. Like, I know ETFs are basically bundles of assets, right? They're traded like stocks.
Hmm.
But how do you actually pick the right ones?
Well, first you got to understand there are different types. You got your sector ETFs, broad market ETFs, even bond ETFs.
Right, right. So like a tech ETF would be all about those high-growth companies, and an S&P 500 ETF would be a slice of the whole market.
Exactly. You're tracking a specific index or sector. And then there's the structure of the ETF itself. Some are physically backed, meaning they actually hold the assets they're tracking.
So they actually own shares of all those companies in the S&P 500, for example.
Exactly. But some ETFs are synthetic. They use derivatives like swaps to mimic performance.
Sounds a bit more complex.
It can be, and potentially riskier. Definitely something to research carefully.
Okay, so we've got different types, different structures. What else should we be thinking about?
Fees. For one,
Huh?
every ETF has an expense ratio. That's how much they charge to manage the fund.
Right, those sneaky little fees, they can really add up over time.
Absolutely, especially if you're investing for the long haul. You want to keep those expenses low.
Makes sense. So how do we start connecting all this to actual investment strategies? Like, what if I'm looking for those short-term gains?
Well, if you're comfortable with a bit more risk, sector-specific ETFs can be tempting. You know, like those focusing on booming industries.
Yeah, like clean energy or AI, those are hot right now.
They are. But remember, past performance doesn't guarantee future returns.
It's not just about jumping on the bandwagon, right? You need to actually understand what's driving that growth.
Absolutely. You need to do your research, analyze company financials, understand the competitive landscape.
It's a deep dive, for sure. Not just chasing a hot stock tip.
Definitely not. You need to be informed, know what you're getting into.
Okay, so what about long-term investors? Those building a nest egg for retirement, for example.
Well, broad market ETFs are often a good starting point. You know, those tracking those major indexes, like the S&P 500.
Yeah, those seem pretty straightforward. Just buy and hold, right?
It can be that simple. But don't forget about those expense ratios we talked about.
Oh, right, they apply here too, even for those basic ETFs.
And there are other nuances, like how dividends are treated. Some ETFs reinvest them automatically, while others distribute them.
Interesting. So even with something like an S&P 500 ETF, there's still stuff to consider.
Always. It's about making informed choices no matter what you're investing in.
You're telling me. But hey, this is a deep dive, right? We've got time to unpack all of this.
That's right. We're just getting started.
Okay, so we've got the basics down, different flavors of ETFs, things to watch out for. But how do we actually put these into action? Like, what does an ETF strategy look like in the real world?
Well, it all depends on your goals, right? Like, let's say you're looking for those short-term gains. Maybe you're willing to take on a bit more risk.
Right, right. So you're comfortable with some ups and downs.
Exactly. In that case, you might look at sector-specific ETFs, those targeting industries that are, poised for growth.
Yeah, I get it. Like, if you think electric vehicles are the future, you'd invest in an ETF focus on that sector.
Exactly. Instead of picking individual stocks, you're spreading the risk across multiple companies in that industry.
Makes sense. But this sounds a lot more hands-on than just buying and holding an S&P 500 ETF.
It definitely is. Short-term ETF strategies often involve more active management. You're
Right.
watching the markets, making adjustments.
So you might hold an ETF for just a few months, weeks, even days.
It's possible, yeah. Depends on your strategy and how the market's moving.
Okay, so you really got to be in tune with what's happening. Can't just set it and forget it.
Right. You need to understand market cycles, technical analysis, all that stuff.
Sounds like you need some specialized tools for that, right?
Oh, yeah. There are platforms out there specifically designed for ETF trading and analysis.
So like real-time data, charting tools, that kind of thing.
Exactly. And some even offer back testing.
Back testing. What's that?
Well, it lets you test your trading strategy using historical data. You can see how it would performed in the past.
Ah, so you kind of see if your approach would have worked.
Right. It helps you refine your strategy, identify potential pitfalls.
Interesting. So it's like a learning tool.
Exactly.
Yeah.
But of course, past performance isn't a guarantee of future results.
Of course, of course. Always got to keep that in mind. Okay, but what about those investors who are more focused on the long game? Those looking for steady growth over time.
Well, broad market ETFs are definitely a popular choice for that. They provide that diversified exposure.
Right, that core holding in a portfolio.
Exactly. But there are other long-term ETF strategies to consider too, like thematic investing.
Thematic investing. That sounds intriguing. What's that all about?
Well, instead of just tracking a broad index, you're targeting specific long-term trends.
Oh, I see. So, like, if you believe renewable energy is the future, you could invest in an ETF focused on those companies.
Exactly. You're aligning your investments with your beliefs about the future.
Makes sense.
Yeah.
But not all trends pan out, right? So there's still risk involved.
Absolutely. You need to do your research, understand the underlying companies and the potential challenges.
Right, right. So it's back to that balance of risk and reward, no matter what your strategy is.
Exactly. And speaking of managing risk, we haven't even talked about rebalancing yet.
Ah, rebalancing. That's another one of those terms that gets thrown around a lot. But what does it actually mean?
Well, it's all about maintaining your desired asset allocation over time. The mix of stocks, bonds, and other assets.
Right, like the classic 60-40 portfolio, or 60% stocks, 40% bonds.
Exactly. But as markets fluctuate, that allocation can drift. Maybe your stocks outperform and suddenly you're at 70-30.
So rebalancing is about bringing it back to that target allocation.
You got it. You sell some of your winners, buy more of the assets that have lagged behind.
Makes sense. But isn't there a risk of, selling low and buying high?
There is. And that's why there are different approaches to rebalancing.
Like what?
Well, some people rebalance on a fixed schedule, like every quarter or year.
No matter what the market's doing.
Exactly. It's more about discipline and sticking to the plan.
Got it. So what's the other approach?
Well, some people prefer a more dynamic approach. They rebalance only when their allocation drifts beyond a certain threshold.
So like if their stocks go up 10%, they'll rebalance to bring it back down.
Something like that, yeah. It gives the portfolio a bit more room to breathe.
Interesting. So there's no right or wrong way to do it.
Not really. It depends on your personality, your comfort level with risk, that kind of thing.
But the important thing is to actually have a plan and stick to it.
Absolutely. Even when emotions are running high, it's important to stay disciplined.
I could see how that would be tough. Speaking of things that can be tough, what about taxes? We talked about how ETFs are tax efficient, but how does rebalancing fit into that?
Ah, that's a great question. And it's something a lot of investors overlook.
Okay, so let's unpack that then. How does rebalancing potentially impact your tax situation?
Well, remember, you typically only pay capital gains taxes when you sell your ETF shares.
Right, right. That's one of the big advantages.
But if you're selling those shares to rebalance, you could be triggering a taxable event.
So even though ETFs are generally tax efficient, rebalancing can create some complications.
It can, yeah. It's not a free pass. You need to be aware of the potential tax consequences.
Makes sense. So it's all about thinking holistically, right? Returns, risk, taxes, all of it.
Exactly. And that's one reason why working with a financial advisor can be so valuable. They can help you navigate all those complexities.
It's like having a guide in this crazy world of investing.
That's a good way to put it. They can help you make informed decisions, avoid costly mistakes.
It sounds like a good idea to me. But hey, we're getting a bit ahead of ourselves.
Right.
Let's bring it back to the core of this deep dive.
Sounds good. We've got a lot more ground to cover.
Wow, we've really covered a lot of ground, haven't we? I feel like we've gone from ETF 101 all the way to like advanced strategies.
It's been quite the journey, that's for sure. But hey, that's what a deep dive is all about, right?
Exactly. We're not just scratching the surface here. We're getting into the nitty-gritty.
And hopefully, giving our listeners the knowledge they need to make smart decisions.
Absolutely. It's all about empowerment, taking control of your financial future.
Couldn't agree more. Knowledge is power, especially when it comes to investing.
For sure. But before we wrap things up, I wanted to circle back to something we've touched on a few times. That whole idea of balancing short-term opportunities with long-term growth. I'm curious, how would you approach that if you were building an ETF portfolio today?
Well, for me, it always starts with time horizon. How long are you investing for?
Right, that makes sense. Like, if you're young and just starting out, you have more time to ride out those market ups and downs.
Exactly. So if I were in my 20s or 30s, I'd probably have a larger portion of my portfolio in growth-oriented ETFs. Those focused on like emerging technologies, disruptive industries.
So you're okay with a little more volatility in exchange for that potential for higher returns.
Exactly. But as I get closer to retirement, that balance would shift. I'd gradually move more towards conservative investments.
Makes sense. More stability, less risk.
Right. Things like bond ETFs, dividend-paying ETFs, focusing on preserving capital, generating income.
It's like adjusting your strategy as you go, right?
Absolutely. It's not a one-size-fits-all approach. You need to tailor it to your own circumstances.
But even within those broader categories, growth versus stability, there's still a lot of room for nuance, right?
Oh, for sure. I mean, even within my growth allocation, I'd want to diversify across different sectors. Maybe some tech, some clean energy, maybe even some international exposure.
So you're spreading that risk around, even within your quote-unquote riskier investments.
Exactly. And on the stability side, you could have different types of bond ETFs, different maturities, credit ratings.
It's amazing how much complexity there is, even within something as seemingly straightforward as asset allocation.
It's true. There's a lot to consider. And that's why it's so important to, keep learning, keep researching.
Right, you can't just set it and forget it. Markets change, your situation changes, you need to adapt.
Exactly. And hey, you don't have to go it alone. Don't be afraid to reach out to a financial advisor. They can help you navigate all this complexity.
It's like having a co-pilot on your investment journey, someone who can help you stay on course.
Couldn't said it better myself. Well, with that, I think we've reached the end of our deep dive.
It's been a fantastic journey, that's for sure. We've covered a lot of ground, learned a ton about ETFs.
Hopefully our listeners feel empowered to take that next step in their investing journey.
That's the goal. And hey, remember, knowledge is power. Keep learning, keep exploring, and you'll be well on your way to achieving your financial goals.
Well said. Happy investing, everyone.
Until next time on The Deep Dive.